And so today we're going to talk about something that I actually do get asked about quite frequently, being a CPA that works with a lot of self-employed folks and entrepreneurs. How in the world do you get a mortgage when you work for yourself, right?
Hi, I'm Bette Hochberger, CPA, CGMA. This channel aims to educate you on tax, tech, crypto, and finance-related news. Come learn how to grow and keep your wealth.
Hi everybody, Cheryl Euart with Community Lending. I have been in mortgages since I was 20 years old, so I'm not going to age myself, but it's
like 2 years.
We're going to say over a decade, right? Yeah, okay. So I started, at the very bottom of data entry, worked my way into the ordering of documents just to kind of get familiar with everything, began to be a processor, and then went into being a loan officer assistant, where I eventually got into the loan officer side of things. So I'm the sales manager of the East Coast team of Community Lending. So I'm located right in Coral Springs, Florida. I hold a dual license in Florida, so I can do loans in the entire state of Florida as well as the entire state of Georgia. But we do have team members on our team that can do loans in the entire US. So we've got people all over that can help with residential mortgages. So
right, because it's like, where's your W-2? Well, you might not have a W-2. What do these poor people do?
Yeah, a lot of people, especially since the pandemic, are struggling as entrepreneurs, one, to kind of regain traction of their business because of everything that's happened. So they're starting to, try to recoup their losses. And in that space, we have a lot of unique and creative programs for self-employed home buyers, homeowners, and investors. So we've got a lot of really neat options, and a lot of people don't know about these options because they're like, no loan officer wants to do them just because they think they're so difficult. And in my eyes, I'm like, this is super easy. So obviously I want to share the wealth of information and help everybody, because it is a temporary solution to accomplish your goal of financing and home ownership. So yeah, we got a lot of really neat stuff.
Well, that's good to hear, because I do sometimes run into people who are like, well, how do I get a loan if I don't have a W-2? So what about those like sole proprietor, self-employed people? What kind of information do you need from them if they don't have those W-2s?
So being self-employed, I think the biggest, challenge that they're facing is they know they're not W-2, they are 1099, or they are 100% owner of their business, or even a partner. And in that space, they can still get a home loan based on their individual income. And there's ways to get around having to document their tax returns. So that's the biggest issue is I don't file enough on my tax returns. I claim too many deductions. Well, I'm not going to qualify, and this, that, and the third. So there's a lot of alternative creative ways to find the right financing that meets their needs for the time being. So I can go into those programs real quick if you'd like.
For sure.
Awesome. So we have, a variety of programs for that specific scenario. So if you are somebody who is, self-employed, doesn't file a lot on your tax returns because of the deductions, these are some of the things you're going to want to write down. So we have a bank statement program where we can verify income through their bank statement. So we would take either 12 or 24 months of their bank statements, average those deposits, and then take out, a 30% expense ratio, and then we give them credit for that income. So that's on their business account. If they have a personal bank account, we can use 100% of the deposits going in. So that's more for if you see someone that doesn't use a business bank statement, or they're 1099, they run everything through their personal, that's where we use that. It doesn't matter if they are a cash business. That's common right now. What they will need to have is at least 2 years of being self-employed, and a CPA will have to verify that they are 100% owner of their business, the nature of their business, when they started, things like that. But other than that, it's a very simple way of us to calculate income and give you credit for what you truly deserve for your business. And that's the bank statement loan. And those have minimum credit scores of like 600. So fairly, favorable as far as being friendly to the lower scores. Obviously, the lower the score, usually the higher the down payment. So just be prepared for that. We also have, let's say you're an investor and you like to, you know, invest in properties, Airbnbs, or if you just rent out homes. We have a no income documentation. So there's no income documentation for this debt service coverage loan. And the way that they work it is they use the appraisal and the income that comes from the rent analysis on the appraisal. That just tells us what the rent's going for in the area. So as long as that rental income equals at least 100% of what your payment's going to be for the mortgage, you're good to go. So no profit and loss statements, no tax returns. You do need a minimum credit score of at least like a 660 to do that debt service coverage loan, and it does require at least 20% down. So the debt service coverage is for investors only. No income needs to be documented. You do have to own your own primary home, but any of these programs, like let's say the bank statement loans, you can do as low as 10% down. There's no mortgage insurance on any of these products, which is great. Yeah.
Wow. No mortgage insurance?
No mortgage insurance on the bank statement. We have a 1099 program as well. So if you're 1099 and let's say you just don't want to use the bank statement, you don't want to show that, investors definitely don't want to show any of their income or bank statements. But the 1099s, we can use usually 90% of what the income is on your 1099. So all of these will come with a CPA letter, which Bette will be happy to help you with. But for the most part, it's a very streamlined process when it comes to getting approved in the eyes, like you're not dealing with Fannie Mae and Freddie Mac, you're not dealing with FHA. These are conventional loans. These are brokered products. They're called non-qualified mortgage loans. So it's non-QM. But for the most part, they still are flexible with the low credit scores. They're flexible with the no mortgage insurance. You know, I always recommend this when somebody tells me, oh, I don't file all of my stuff. Well, here's what we can do. You can go this route and file all of your income with as little deductions as possible, or you can go this route. And it's a temporary solution to get into the home. You can do fixed rates. So you can do a 30-year fixed rate mortgage. They're not all adjustable, which is good. And yeah, I mean, your debt to income can go up just the same as what conventional loans allow you to go to, which is 50%. And we do the foreign nationals as well. So we're seeing, I think this is something you're seeing too, is a lot of foreigners are coming wanting to purchase properties and investment properties here in Florida. And whether it's Canada, whether it's, Brazil,
South America,
Spain,
Brazil,
China,
you see a lot of that. Yep.
I've got a lot of clients like that. So those programs, you can do the debt service coverage as well. So no income documentation for the foreign nationals. So,
wow.
Yeah, it blows people's mind when I tell them these things.
That would blow my mind. I wouldn't think it would be that easy to come from another country and get a loan and buy property here. So that's pretty impressive.
They're revamping these programs all the time, adding nice little changes as far as improving their loan to value requirements or improving their credit requirements. So, foreign nationals, not all of them have a credit score. I know Canada does, but we they don't live here in the US, so they obviously have to have a foreign address. But yeah, these loans can go up to $1.5 million on the foreign nationals. You can go up to $2.5 million on the jumbo products. Some of them, depending on the broker channel that we're using, they'll allow it to go up to 3 or 4 million in property value. So
wow, that's
a
incredible.
lot of flexibility here.
Let me ask you, for these products, what are you looking at as far as interest rates? And we know the Fed's just raised interest rates, so that's kind of on everybody's mind. But these are a little bit different than your normal mortgages. So is it a different interest rate you're looking at anyway?
That's a great question. So interest rates right now are pretty high. I mean, we're seeing anything from, the 5s to 6s right now in the conforming space of Fannie Mae, Freddie Mac, FHA, and VA. So these programs are not that far off. It depends. Obviously, there's a lot that goes into an interest rate. So when people say, what are the interest rates? I always tell them that's a trick question. Anybody
Right.
just throwing the number out is going to be just, reeling you in. So interest rates are derived on credit score, property type, occupancy type, down payment. All of those things go into a credit score. So with, let's say, the investor loans, you could be looking anywhere between 6 to 8%. If you have a housing event, such as a foreclosure, a bankruptcy, or a short sale, sometimes those require a little more money down, or sometimes a little bit of a higher interest rate. Because remember, this investor is taking on the risk of lending you hundreds of thousands of dollars without you showing any proof technically that you could pay this back. So,
which is really incredible if you think about it, right?
It's very generous.
Yeah,
it's very generous. So now there's no prepayment penalties on primary residences. I know that's always something they ask. Well, what's my prepayment penalty? In the world of non-conforming loans and these brokered programs that we're discussing, the investment properties are the only ones that have prepayment penalties on them. And it's usually anywhere from 1 to 3 years. And what that cost is, because I know someone's going to say, well, how much is it? It's usually 6 months of what your mortgage payment is.
Oh.
The principal, interest, taxes, and interest. I mean, it could add up.
Gotcha.
Don't get us wrong. It could add up. But these are great solutions to get into the home. Always speak with your lender and strategize, a way to make sure that once this first year is up, how can I get out of this program type? Because remember, recession's coming, right? It's coming. There's no guarantee.
Oh yeah,
when it's coming.
It's coming. Maybe not Florida. I feel like we might opt out of it.
We opt out of everything, don't we?
We really do.
Yeah. So with the recession coming, just keep in mind you're not keeping this loan type for 30 years. You may only keep it for 12 months, 18 months. And when that recession hits, we can always refinance you out into that conventional world and get you into the lower rates once they start to drop. But it's a great tool to use to accomplish the homeownership goals they have while being self-employed and while working over the next year or two to recoup their losses from the pandemic to have them really come out on top.
That's awesome. So. All right. Well, Sheryl, I don't want to keep you here all day. It's such an interesting area, and I'm sure people are going to be asking me questions about it because they asked me questions about it already, so we know where to send them. So my last question for you is, do you have any interesting hobbies?
Hobbies. So I guess, yes, I do. I mean, obviously everybody does. But I used to, and I haven't done it in a minute because I have kids and they take up my life. But I actually was an extreme couponer. So
really?
I did, yes, even in mortgages, like I would help clients who literally have spent everything. And I'm like, listen, I will teach you how to do this. And they have gotten $300 worth of groceries for $13.
What? No, now you have to teach me how to do it because I
have to send you. Things come up on my Facebook memories all the time of all my little hauls that I did. It said, got paid $30 and took, 6 packs of toilet paper home. But this was before the pandemic. Okay, guys. So I was not one of those.
That would have been useful in the pandemic.
Yeah, I was not a toilet paper hoarder. So yeah.
All right, we'll have to have another meeting where we just on extreme couponing because that's amazing. I always find it so fascinating. I don't have the patience for it.
Yeah, it's a challenge. But yeah, it was always but thank you so much for having me on today. Yeah, and if you have any questions, feel free to reach out to Better Myself.
What happened?
You're good. I can hear you.
What happened? Great. Well, so next time, extreme couponing.
Sounds good.
Oh, this is what happens when you do stuff on the road. Thank you so much. We'll do this again another time. where I am static and not relying on spotty internet access. And we're gonna drop your information in here. So if anyone has questions and needs to get one of these products, if you're self-employed, 1099, investor, all of these things, Sheryl is your woman. Thank you so much. And we will see everybody next time. Have a great holiday weekend.
Bye.
Thank you for sticking around. I hope you learned something new. Please leave a comment, like, and subscribe to my channel if you want to continue improving your tax and financial literacy. Bye.